Okay, so we have a question for you, and I know that you are prepared for this. And there's a specific client for me that comes to mind on this. And it was a gentleman that insisted he was looking at houses, he was looking at new builds and everything, and he had a lender, it was not you, that was on board and was jumping through hoops for him, and he would not let her pull his credit. He was determined that his Credit Karma score, and he was actually using his Credit Karma and his, I think it was like his Capital One credit card had a credit score attached to it or something. And he kept on sending these credit scores as his proof of his credit. And then when it came time for him to actually fill out the application and get the credit pull, that wasn't the case. And so, and he didn't understand it. And there was this whole, chaos that ensued from that. So I think it's a really, really good topic for us to dive into. That's going to be a resource for people for a while. Like, how are the credit scores determined? Why can't you use Credit Karma? Like, give us the lowdown on all this.
Yes, I am ready. You're right. Just a little bit about the credit scores, right? We lenders use FICO credit score, which is Fair Isaac Corporation. And there are a lot of different scoring models within the FICO, and I'll talk about it in a little bit. But in general, most of the companies, they use FICO, and which measures risks for lenders or other creditors in a form of the score, right? And score could vary from 300 to 850. And based on that score, you're gonna get certain, for some certain products are available and certain terms are available. So in general, how is credit score calculated? We'll look at, so here's a nice chart right here. So 35% of the score calculation is based on payment history. Credit cards and or mortgage loans. Are there any late payments, 30, 60, 90 days late, or no late at all? If there are collection and charge-offs, any older problems with credit. 30% of credit scoring is based on amount on, so we call it credit utilization ratio. How much of the limit is used up on credit cards, for example, and you don't want your credit utilization ratio be over 10% of the limit. So, for example, if your credit card balance is $1,000, you don't want to have a balance over 10% of that limit. And how credit bureau knows what your balance is? The credit card companies report the balance to the bureau, right? But they don't report every time you use a credit card. They report it once a month, and they report it before your due date. Every credit card company is different, and I know that a lot of people use the credit card maybe to accumulate points, get cash back, right? So you use up maybe up to the limit of your credit card. Maybe your limit is $3,000 and you use all $3,000, but then you pay it off at the end of the month. And what happens is that if you pay it off on the day it's due, the credit card company reports before you pay it off. So credit bureau thinks that you still have that balance and your utilization ratio is high, so you're maxed up on your credit card. And that's negatively affects your credit by 30%.
Even if you pay it off each month, it still shows that it's carrying that balance. Wow.
Exactly.
You know what? It would be great if they all had to report at, say, the 15th of every single month. Then when someone was applying for credit, it's like, okay, pay off your card on the 5th of every month, so that would be empty. But you said they're all different?
they're all different. And if someone is working on building their credit history, credit score, and maybe getting ready to apply for a mortgage and want to increase the credit score, they should contact the credit card company. Just ask them, when do you report to the credit bureau? And maybe they report 5 or 10 days prior to the due date. Then you just pay it off at that time, or pay it down and keep the balance below 10% of the limit. So
That's a really good tip.
That's a great tip.
Yeah.
I didn't realize that. That's
Yeah.
awesome. Okay.
My 2 cents to that. So then we also look at length of credit history. How how old is your credit history? Important to keep older accounts open, because if you have 5 cards that are 5 years old, and then you decide to open a brand new card and consolidate all those balances into the one card, and you close out old cards, you wiped off 5 years of worth of credit history. So 15% of the scoring is based on the length. So you're gonna get hit with the credit score going down if you close out the old accounts.
Okay.
Yeah, so they look at average rate and minimum 2 years of history on age of older accounts. 10% usually is number of new accounts. How long have new accounts been opened? Recent requests for credits or inquiries. Those are usually negative effects on the credit score.
Can I ask you a question about the length of credit history real quick?
Yeah.
Does this, we have, one of our credit cards, we've put a signer, one of our adult kids as a signer on it. So my understanding, and correct me if I'm wrong, is that will effectively help his credit history. Is that right? If
Yes.
it's my credit card and I've made him an authorized signer?
Exactly, yes. So, and they will score him based on history on that card.
Okay.
So if you have great history, never late, it's gonna be positive effect on his credit score. If you use it up, if you use it up to the maximum and you pay it off when it's due, and that it could present high utilization, then it would have a negative effect.
Negative effect.
Yep.
Okay, so that's something parents keep in mind. If you're really great, then do your kids a favor. If you're really bad at it, don't do them any favors. Okay, thank you. I wanted to clear that up.
But that 30% is huge. I did have a client who was authorized user on a credit card that was heavily used and had high balance, which was almost 100% of the limit, and her credit score was 640. I told her to get off that authorized user card. Her credit score went up to 800.
Wow.
And it's a true story. It's something that people need to keep in mind.
Yeah, absolutely.
Yeah, so how then we have 10% influence on types of credit. So if we have installments, loans, revolving is credit cards, right? Installment, car loans, student loans, unsecured loans, stuff like that. Maybe retail accounts. So if you have different variety of cards, then that's it's about 10% influence on the credit scoring.
So that would be the credit mix on the graph over there on the right, correct?
Mm-hmm. Correct. Yeah.
And do retail accounts reflect differently than revolving? Like, say retail would be like, you go into Ulta and they ask you to get a card. Did they reflect differently than, say, your American Express card?
So I guess they just also see that it's mixture of types of credit that you have, and it has some positive effect on that. So they can just see that you have different sorts of credit, and you're able to manage all that, and it's healthy credit history, and it helps.
Okay,
It's only 10% of influence, but it's still there.
Yeah.
So the question that you started with, Sean, about this client who was looking into, using Credit Karma, and it was completely different credit score. So why those scores are different? And that's because there are many different scoring models. Just with FICO, there are over 9 scoring models, and they have different sets of rules, and they look differently at those. The chart is not going to be the same for them as what I was showing you, right? Because some of them look at and score everything differently. For example, Credit Karma.
mhm,
Credit Karma uses Vintage, not FICO. And even with FICO, the lenders use FICO 2, 4, and 5.
okay,
There is FICO 8 is commonly used by credit cards. And
Okay.
they measure everything differently. For example, they don't look at late payments that are over 2 years old.
Okay.
So
Mm.
if you have some lates in 2020, it's been more than 2 years, they're not gonna take in consideration. Lenders use FICO 2, 4, and 5, and we look at credit history going back 7, 9 years. And
okay,
we score based on that. Then, for example, they don't take medical collection for scoring. They don't use that. FICO 2, 4, 5, we do take that in consideration. If you have medical collection, that's gonna lower your credit score.
okay,
Collections under $100 are not scored. And in general, they look at utilization and age of credit differently. Why a lot of companies like Credit Karma, CreditWise, they use Vintage or FICO 8 because they're cheaper, because they don't evaluate as deep as FICO 2, 4, and 5. So it's free service to people, right? So they actually use Vintage because it's cheaper for them.
okay,
And unfortunately, it's in sort of misleading, because in case of your client, he was thinking he has great credit, and then when they finally pull the credit, it's not the same.
It
Also,
almost seems like their matrix may lead to an artificially higher score as well, which would draw people in to look at that, so then they can sell space to their advertisers and so on. So there might be an ulterior motive to presenting that different methodology to have that higher score.
exactly, but also a lot of credit card companies, or even car loans, when you get car loan, they will look at, they're not gonna look at this, use the same model as lenders do.
Yeah,
So for them, it's gonna be more accurate when someone is applying for a credit card
true.
than
Yeah.
for the mortgage. But for the mortgage, you just need to keep in mind, it's gonna be different. People are scared of doing hard pull. But
Yeah.
hard pull, as you saw, has only 10% influence on the score.
right,
And when someone goes to TJ Maxx and they offer them 10% off on $100 bill, and they all excited and they apply for that credit card, that's gonna be a hard inquiry. So nobody thinks about that, right? But for the mortgage, and because we use different scoring models than everyone else,
Mhm.
when we pull the credit, that credit score doesn't drop for us, and we go by our scores, not by Credit Karma or anyone else.
right,
When you say it doesn't affect yours, do you mean, for example, your Prosperity Mortgage, you pulled their credit, so you're not going to take that into account, but if another lender went and pulled credit, would your will affect their score in their eyes?
It's gonna be actually the same, honestly.
Okay,
Yeah, they're gonna get exactly the same score, and I've seen that before when clients shop around and they tell me this is my score with another lender, and when I pull it, it's exactly the same.
got it. Okay, makes sense.
I know we're gonna be sending this video link to people again
Yes.
and again and again, because this is, these graphs right here, I feel like
That answers a huge.
this whole thing is so full of answers to questions we get asked all the time, and this right here is a very good visual.
Yeah, yeah. Plus, I'm sure you're about to go into this, but the whole 3-score factor with taking the middle and so on, that's another layer of it.
Right. So there are 3 credit bureaus:
Mhm.
TransUnion, Equifax, and Experian. And each gives us different scores, and we'll look at the middle score. So if somebody has 760, 730, and 720, we're gonna go by 730 credit score. If it's a couple applying, we'll look at the lowest of 2 middle scores. So if one spouse has 740 and another has 640, we're gonna go by 640 credit
Okay.
score.
That's when you're like, get off of my application.
And sometimes I do suggest that
Yeah.
you know, if one person qualifies on their own,
Yeah,
just, you know, get the spouse off and put them on the title, they're gonna have the same ownership to the
Right.
property without hurting the score.
yeah, it's
And-
like, it's like you weigh, do you need their income enough to account for taking their bad score, right? And that's why they need to talk to you, and you get the big picture to say, okay, how do we do this?
And I can run a credit simulator for them and suggest if, for example, we do need that spouse on the loan because of the income. I'll tell them, this is what you need to do to increase your score to the level where we need it to be. And once they do it, they provide me with evidence. I submit it to bureaus and they rescore them fast. We can do that as well.
Yes, and I'm so happy you said that, because it makes me want to reiterate a point you made earlier. If people think, oh, well, I'll pay this off and then cancel that card, and like you said earlier, don't do that, right? Because the canceling of the card ruins one of the amazing factors of the credit history, the length of credit history. But you're saying you have a credit simulator, a system that you can run everything in, and it'll tell them exactly what steps to take that would increase that?
Exactly. And if they follow the directions precisely, it increases the chance to increase the score to the level we needed. Because if they do what I tell them, but they also go beyond, and maybe sometimes paying off the credit card completely is worse than leaving a little bit of a balance, believe it or not. So the simulator tells me exactly what balance we need to see to have. And that's what we need to follow. And I tell people, don't self-diagnose yourself, don't self-medicate yourself. Just let me look and I'll tell you exactly what needs to be done. And sometimes, and I hate when it happens, people think that paying off credit card is gonna help them, but it doesn't do anything but hurting them by, you know, using up all their assets or a lot of their assets, and now they don't really have enough money and they didn't really need to pay off the debt.
Right.
Yeah.
Yeah. Because there are so many factors depending on the loan programs, right, that they qualify for, that sometimes they might need to have so many months of reserves and assets. And if they use that money to pay off credit cards that they didn't need to pay off, then what are they going to do? It's not like they can say, my bad, credit card company, can you give me that back? You know?
Exactly.
Yeah.
That's
Yeah,
a very good
I think the
point.
big takeaway is your loan officer is your friend, right? It's like they're your teammate, their partner. Yes, they're looking under the hood, but like they're gonna tell you exactly what to do to get you what you want, you know, and that's the key.
And you got
Exactly.
an officer that listens and knows what you're looking to do. Absolutely, yeah.
Yeah. And my goal is to help client to buy the house and qualify. So I would lead them. If they're not ready right now, I'll tell them what needs to be done, how to prepare to be able to get the mortgage in the future.
All right, well, that was really helpful.
Yeah, that was
I
really-
agree.
I'm
We're gonna
really
use
happy with
a
it.
whole lot. All right, anything else? Any other pointers on this?
I think that's about it, but if anyone has further questions, they can always contact me. Can I give my contact information?
Yes,
Please do,
please do.
yes.
My phone number is 571-245-3000.